Okay, welcome everyone to this nice fresh Monday night in Melbourne. Okay, so let's do a quick sound check. Okay, sound okay? Thanks, Gina, for reading my mind. Okay, so, well, looking for trades. Looks like there's one just completing at the moment, so same. Okay, good. Okay, so as we can see, the 5 minutes reached its minimum targets. Okay, and you'll notice that we have riverbanks. Okay, so in the previous templates, trying to give people more entry and give some assistance by having arrows identify places where entries could be if we missed the ideal entry and things. It really gave too much opportunity and decision to make, and it really gives us the opportunity to sabotage ourselves, because we can then create and massage a trade for the pros of entering it or not. Whereas really, when the river was visible, it's easy to go and see where an extreme boundary is when it's approaching a riverbank. Okay, so, and our expectation is when there's a riverbank, the price will find it uncomfortable and would like to come back in. And that trades that finish outside the riverbank would then like to come back in and get back to at least the center line, etc. Okay, so what it does is then it puts the focus back that the most ideal entries are going to come from very close to the riverbank, on the riverbank, or outside. Okay, because then when they go and move to the other side, they have elastic momentum and almost always reach, at the very least, the opposite riverbank. Okay, and because that's the nature of trading, you know, the only time a diamond around the center would be one that is going to be a jumping diamond in the same direction as the momentum. Yeah. Okay, so what we're focusing on is really in the big picture scenario is that when a diamond goes to extreme, that means at the river, outside the river banks, it'll want to come in, and what we'd like to see is a vertical line. Okay, for a buy, we'd like to go and see a blue vertical line appearing after a low and a red. Okay, so two things to happen. We need to see something outside, a diamond outside the riverbanks, and then we know it's ready when we get the vertical line. The vertical line is the software's way of identifying a candle where you get all your information from. Okay, because the vertical line, when it's confirmed, tells you that's the candle. Our default and channel stop lines are measured from the opening price, and then the take profit areas, if it's going up, the riverbank, the channel, plus your 1 for 1 and 2 for 1, take profits. Okay, price action comes from anywhere near or outside the riverbank, will do its utmost to, at the very least, get to the opposite riverbank. So really keeping in this big picture mode where your focus is not trying to get into all these trades when it's muddling around inside, is really around the area where they're actually going to do something definite, and there's some definite sequence and a look of what it looks like. Dotted yellow, center line, green perhaps, etc. We've got things that say, hey, yep, okay, it's at the next checkpoint. Yep, now it's ready. And now I've got my confirmed vertical line. Now I know where to measure everything from. Okay, it's not from this candle, it's not from this candle, it's from confirmed vertical line, yeah? Because from there, it tells you that's the lowest point. It tells you how far your stop level should be, and then points in the direction that you should look for your profit. So if we maintain and keep your eye just on the main way and landmarks, I call these landmarks because they stand out, like the Eiffel Tower, you know, Statue of Liberty, Big Ben. Everybody knows where they are. So how do we know where an ideal entry comes from? It comes from one of our big landmarks. All our landmarks are basically at the river bank, outside it, or very close to it. Okay, that's where we expect to see it, and that's where it has the most meaning for us. Everybody happy with that? A little bit of typing would be great. So, yeah. So this way, we only really engage ourselves and get excited when we've got a vertical line alert and we see that there's a diamond before it that's actually at the extreme, close on or outside of the riverbank, yeah? Or when we get a diamond alert and it's extreme, our expectation is that it would like to get back there. Whether we're able to get a trade when it comes back towards the center line would be then waiting for a vertical line to actually turn up so we can assess it. So it makes our trading very simple and repeatable. Okay, so the bare basics is really all we need. Okay, we'll take this last trade about an hour ago as an example. Okay, now when this blue vertical line is confirmed, what does it tell me? It tells me that the diamond, the lowest diamond that preceded it is the lowest diamond. Yep. Okay. It tells me that this is the candle that I see whether my shading and all my criteria is met. It's in the buy zone, orange timing line below a dotted yellow or green, center line, green shading, window 2, green shading in at least 2 of the 3 of window 3, 4, or 5. Okay, so this obviously met criteria. Okay, so if it's confirmed, we're able to go and put all measurement lines. Okay, now the reason I'm doing this is to show that a confirmed line tells you all this. And at any of these candles that's after the confirmed vertical line, if it hasn't reached its destination or got its diamond, can all be entered. And wherever price is, whether it's here, here, or here, you can measure to one of the trade management lines. Okay, there's only 6 pips left. There's only 2 pips left. There's 9 pips left. You know how much is left for minimum, so you can decide whether that's will be enough for you to go and enjoy your trade. Okay, so, and the only way to about again, always about to measure very quickly, is when you've entered a trade and you've done all your trade management lines. Yep. Okay, so that's the important thing about the confirmed line. Notice it tells me the candle where I do everything. All my information comes from here. So why would you trade any other way? And what benefit could you get? Because in this way, when it's confirmed, you've got all the information to keep you in the driver's seat of the trade. Okay, so channel or 20 pips, yep. And this one we said was that now that we have the riverbank back, we always do one at the cross of the riverbank and the vertical line. We do one at the channel line. Okay, we do our 1 for 1. Yeah, because the stop loss is 20 pips. We have 20 pips, and 20 pips is pretty much between the river and the channel line. Yeah. So this is what this vertical line told us. It tells us that this is the lowest price, that our stop loss has to measure open price of the special candle, 20 pips below it, channel or 20 pips. The channel's only too close. Yep. Channel's only 10 pips. Our default's there. Okay. So no, I don't really. If I know all this and I have all this information, do I really need any additional arrows to make a noise, distract me, etc.? Do I need to ask anybody, is there, can I enter? Well, the answer is, here's the minimum part that's going to hit. Okay, so at this point, I can measure there, 8.3. I know there's 8.3. My spread's 2.5. So I'm looking at just over 5.5 pips. I know my stop loss is not going to be hit because it's the same distance away. So if I do want to enter a trade, I know that I can take profit, and I'm comfortable that my profit target's there. So a trade is knowing where your stop loss is, and knowing your profit target, and knowing it to be achieved. Okay, and that's what the confirmed vertical line does to you. Okay, so it answers all the questions. Yeah, 2 for 1, 40 pips. Okay, 40 pips is up there. So it's at the balance line. Okay, this balance line is for the shading, yeah, support resistance shading. Now you got a green on top, and this is the balance, which is the pivot. Okay, so how much really? At this point, any candle after the confirm, because the confirmed also says that's the lowest, also says that it needs to get a current high. That means a diamond has got a white dotted line joining it. So if you didn't get one appearing there at your river center line, you don't still got to get it. Okay? So pretty much you're still in control of that. When the diamond starts appearing, really that's the software saying that it's meeting its threshold and you should consider taking profit. Okay, now when you get this in the habit, then you can look to extend it. Oh, can it go further? Because the chart can tell you that, and your multi-screen charts can do, multi-chart screen can also do that. But before you advance all that, this is the basic things that you have to be able to just do and repeat. And you can see it ain't hard. Vertical line comes up, assess, meets assessment, place trade, mark after your trade management lines according to the defaults of each time frame, and the expectation is confirmed. It will go to the opposite. It will want to go to the opposite. Why? Because first of all, the low diamond is just outside the riverbank, so it's one of the high potential trades. That's price, the lowest price is just an extreme, so it will endeavor to get to the opposite side. So why did it? Okay, so just wanted to bring it back to the reason why there is just seeing the, what's being posted, what's not being posted, etc. What could be stopping someone from placing trades? Do I give them too many signals that it makes it too hard? Sometimes it is. Sometimes we do have too many signals. And The signals can be a help, but they can also be a distraction. There's enough information there for us not to have additional signals. You know, so, and the rule of thumb is that from extreme, it wants to go one side of the river to the other side. Main characteristic of most currency pairs. Okay, some take forever to get from one side to the other. And pound Aussie and pound New Zealand and that aren't generally slow moving currencies, yeah? Okay, so unless, is there another currency that's looking like it's presenting in a trade? Sorry. Just moving my head around with excitement as I'm speaking, so I'll try to go and keep it fixed in one spot. Okay. So now the other part, I just want to basically once again reaffirm its importance and the value we get from it. Okay. So data report line brings your focus into a standard process where it gets us involved with the chart, connect to it because we have to take prices off it, enter it in a calculator, and then copy and paste. So what this does is create mindfulness. Yep. So it's a very popular term in most of the high, you know, career-oriented people, people that want to go move their careers and their health issues, mindfulness coming into place. So mindfulness is really focusing on one thing and blocking out the chatter. So in trading, what would we like to do? We would like to block out the instructions and the chatter and just try to focus on what the currency wants to do and what the task wants to show us. So refreshing the charts at the beginning, doing our report lines, does this. It brings us that space of locking out the chatter, working on one currency and not more than one currency, because even looking at another currency can influence subliminally a decision or a trade that you're doing in current that affects it adversely. Okay, so the way we trade is multi-chart of the same currency because they have the same field and the price is always the same. Now, the other thing is data report gives you a strong support and resistance reversal areas. Okay, so it's like a weighted high and low where price is going to find a solid attraction or resistance. Yeah. Okay, so we're down here, we're pushing upwards and we're attracted upwards. Okay, so based on the previous 8 hours, these are strong areas where price would need momentum to go past. Okay, and if there's no momentum, then price will just go from one side to the other, it'll range. Okay, but these orange lines, reversal lines, help mark out of all the report lines, the ones are the strongest. Yeah, so it makes sense. So what it does is really put strong resistance and support areas, and if your riverbanks land on them, what does that make it? A stronger resistance and a stronger support. Yeah, by addition. Okay, I see some chat there. I'm very, okay, I must still be moving my head around. Okay. A bit closer. Thank you. Okay, so this report lines do that for you, and they support the riverbank and the extreme. So if price goes on or outside of that, and you've got a strong resistance above, price is going to if we've got an upward movement, price is going to be attracted to this area. So we'll find it hard to get past. Yeah, and we may expect that it might bounce off or retrace. Yeah, back in the other direction to get further momentum if it wants to go up. If there's no momentum, then it'll probably move down, back down, and go to the bottom report line. Okay, but these reversal lines are like boundaries, you know, reasonably strong boundaries, just like the riverbank binds the price action within it quite well. Our 8-hour report lines with the reversals to some extent do that. It gives you an idea. The price, unless there's huge momentum, will be maintained within it, within those walls. Okay, questions? Am I still fading in and out? Okay, so once again, having the riverbanks gives you a visual of the extremities. Okay, those, and allows me to get us to go and just focus at the most basic things that would get us our 1, 2, or 3 trades a week, because these extremes are easy to see, and you know what you need after you have an extreme. You need to have a vertical line turn up. Otherwise, you're not really interested, because if you don't have a vertical line, then you can't really put, you don't have a witch candle to mark out all your trade management lines, and you don't have a criteria met, even place a trade. So really, and you can see in the multi-chart. Okay, so extreme. So I've just pointed to 30-minute extreme. I've pointed to 1-hour extreme, 15-minute extreme. Okay, I'll have to minimize. Okay, and a 5-minute extreme. When all your time frames have their extreme at the same outside on the same riverbank, price is not going to move too much higher in this part, really. The expectation is that we'll want to come at least to the middle of the center line of the 1 hour, which would be, you know, the opposite riverbank of their smaller time frames. So as you can see, okay. Yes, for most of you, this is just repeating. Okay, so 1 hour, yep. From up there to at least to the center line to be happy. 53 pips, you know, price went down, retraced a little bit, hung around there for a while, and then pushed down, yeah. So you can see that price is being contained somewhat within these two reversal areas, yeah. So that's what the report line just gives you a framework of what price is going to work within and expected to work within in the next 8 hours. Okay, so, and you can see that that we focus on trades that are presenting and vertical lines that are presenting close to the extreme diamonds at high. It basically puts us in an area where that we are going to get a trade that's going to get to the opposite riverbank. Okay, because when it comes from outside, it has a better momentum chance of getting to the opposite riverbank. You know, if you start from the center, it's hard to get a run up to go across. So expectation is, and you'll see, extreme, price wants to get at least to the opposite riverbank. Our vertical lines here, opposite riverbank, yeah. So it gives us a quick part. If we get a confirmed line, we can just look at the opposite riverbank as the initial, expected, and minimum target. Yeah. So that means we don't get any vertical lines. We can relax our body. Okay. Whereas if we're looking for re-entries for 2 hours, our body is going to be tense. It's not going to be relaxed. It's basically going to have your adrenal glands working overtime. And that's why you feel fatigued, even though you sat there and really did nothing, but you had your body and your adrenals pumping adrenaline, yeah, to go and keep you alert. So this way, by relaxing and only coming to attention and alertness when you start in the environment of where a good trade is going to come from, the now or the near future. Okay, so took away all the additional distractions. When the many lows and many highs, yeah. Because the alert comes, your body goes into get ready mode, no trade, and so it's just get pumped up, disappointed, get pumped up, fatigue's gonna happen, yeah. So maintain the focus, and what you'll find is in this manner, it's very easy, or a lot easier, to spot the trades that going to help you get the result you want, and they're not hard to find. You want to look for gold nuggets above the ground. You don't want to go digging 5 kilometers down. You know, if you have an opportunity, just pick up gold from just, you know, within inches or on top of the ground, and you've got your gold detector and picking it off that way without doing any manual hard labor and dusty work. Okay, so I would consider trades and alerts that came after an extreme high or an extreme low would be the big picture, and I'd have my focus more around those areas, and that way I'll never be disappointed, and that the trades will generally go to the opposite riverbank. But that's the minimum target. Okay, and then you've always got your diamond that will alert you if perhaps the market may want to go and stop at that stage. Okay, so these are once again tools. No, we don't have any mini arrows there, and we're waiting for our big high and low diamonds. You'll find that you'll end up taking more profit anyway. Okay, not have any false alarms, and if it hasn't hit a diamond, and you already know like here, it's a trade management line, the riverbank. So at any of these candles, you can see that it hasn't hit its minimum target, has got a diamond. So at any of these points, you could have entered. You don't have to ask anybody. You have to go and decide whether from there to your trade management line, is there enough pips that you would actually take the time to enter that trade. Okay, but it's your choice. Okay, you know what your spread is, so you wouldn't be entering the 2 pips to the riverbank or 3 pips, would you? Okay. All right. So big picture, and the river, having the river and taking the other lines up, because really that's today, that's this morning, yeah. So if we're just looking for one trade, opportunity, per day. We had a few there in the 5 minute. Couple of presentations here. Okay. But once again, if this is confirmed, this vertical line where I put the crosshair, this is minimum target. Yep, down here. So virtually, any of these candles, if it hadn't reached that line, I can always see how many pips are left of my minimum target, and I can then decide whether I want to enter the trade. Yeah, because if it hasn't hit it, it's still got to get there. The part you got to ask is 13 pips sufficient for me to want to enter that trade? Yep, so you always know where your profit target. If you don't know where your profit target is and what your risk is, then the thing is, take the screenshot, don't enter the trade, take the screenshot and learn from it. Okay? But you should never have to ask, can I enter? Because if you can't answer that yourself with the charts and all the information there, then that's what you'll work on, yeah? Now, okay, yep. So that's what I mean. If we use the big picture, it's very easy for you to stay in control and command because you've got all the information as to where, which candle, and how to map out all the important information, where my stop loss, where's my take profit, and what's the chances, and how good's my stop loss. Stop loss is going to be as good so it doesn't get touched or hit, and to be far enough away to allow you to get your take profit. Okay, if it does that, that's a good stop loss. Okay, and we do have a good way of setting our stop loss. Okay, the other line that you may notice is just this white line, yeah? Okay, this white line is a little brother of the orange one. The orange timing line is a 15 period. The white is a 5. Okay, the 15 I'm using as a timing line, so as long as it's above the center line, momentum is downwards, and if the center line is pink, that also reinforces that if the orange timing line is above it and it's pink, that at that stage it's definitely ready for an upward movement. Yeah. Now, the white one I use more as a highlight. Okay, a lot of times when we look at the candles and they get smaller, even though we get the riverbank, we're expected to bounce off it. What you notice is that with the little brother or this white line that underlines or outlines whether it's predominantly down or predominantly up, you notice that in the upward movement, the white line basically hugs the bottom of each candle, okay? And that when the white line's pointing up, generally it's going to go up, yeah? And when it's starting to go and point down and price action, you know, the love handles start going below it. So it just helps you, I keep a track that it's going up, okay? So over here, when we're at the vertical line up here, and we can see price action open below the white line, then the candle straight after, which is the one that you would be getting the alert, red line alert, you can see that the white line's downwards. So it helps you feel very positive about the downward movement and that the red confirmed line and that you're at the right place at the right time. So it's basically just a positive highlight of the direction and the visual cue to your eye to make you feel more at ease and more in charge and more in the driver's seat of your trade. Yeah? Okay, so over here, if I was looking for a re-entry and price didn't get a diamond, and I see that the river center line is still pink, and I see these starting to get blue love handles and the price opens there. This helps highlight that when price resumes its downward move and opens below, that's a good area for me to re-enter that trade. So no, I don't need an arrow to do that, do I? Okay, so once again, these are just visual cues so that there's no guesswork, yeah? Okay, so that, yeah, so here's our 15-minute chart back there. So once again, yeah, you can see the candlestick coming there, vertical line confirmed, and basically price bouncing off and touching and bouncing off the extreme price, moving in upward direction. You got momentum, upward momentum of the center line there. Our timing lines below. Okay, and we can see our white lines supporting the candles in its upward movement, as if the candles are using the white line as a stepping stone upwards. Yeah. So yeah. So once again, in the chart, we're going from extreme when the price has a high outside or close or on the line, our expectation wants to come down. Now you can see how orange and white line help support that, and orange above the river center line, pink, etc. Okay, price actions in the sell zone, the white lines in sell zone. Okay, so it's all showing all these things are supporting to push downwards and help price to get to the opposite riverbank. Yeah. So we're probably going to go and finish up there. Over here, this is not confirmed. Why? Even though we've got everything above, river center lines yellow at this stage. I mean green. Yeah. No price. So there's no confirmed at this stage, or not yet. Okay, so have a good night, and hopefully that helps you out. And yeah. So yeah, so for those that haven't got the template, it's pretty much along the purest ways that of it. Once again, makes things stand out. It makes the obvious more obvious, and we like obvious trades. Yeah. The more obvious, the more happy we are. The more extreme, the more happy we are. Yeah. Because price action doesn't like extreme, so we like to work with that. Okay. So thank you all for your attendance, and catch you same time next week. Have a great week.